Hey folks, welcome to Wednesday, the 22nd of December 2021. A couple of days into my COVID and Omicron. It's not that bad for me personally speaking. A little bit of a head cold, not that much. So unfortunately for me, probably another 7 days of quarantining. Anyway, looking at these markets, what we've seen yesterday was a pretty decent little dip to close the gap, for example, on the NASDAQ, and then a drive up late into the session. We'll have a look at that in the charts in a second. Now, we didn't get the gap close on the SPOOs or the Dow, but I think, the longs on the Dow were quite well telegraphed. Oil really crazy bid up over the open and just holding that condition all the way through the day. So, that's really what I want to look at here. Which is one of the trades that was potentially a real widow maker yesterday. I'll bring up the gap here, right? So this is it in yellow here, right? Was the gap that was open yesterday, and good resistance in the European session, and then we came into the open on the pit here, 2 o'clock on this candle. Now bid up, close the gap. Next candle opens, takes an offer down. But I was saying that really, selling on the top of that gap close was not really the trade you want to be on. Sure, there were some nice small scalps to be had, shorting off the top 70 spot 56, top of the gap there. But you can see once we pull back on that on the second hour of trade on the pit, then it was really one-way traffic up to this trend that you see here, and we can switch back to the daily chart here to see that trend coming into play. This area, a lot of excess was put into these levels up top, so that's why I have this big area in red above. You see that on the 60-minute chart, 100 EMA up there acting as resistance as well. For me on this daily chart, it looks like we are sort of just consolidating really in this overall area here. To really figure out, probably a pullback to the 6540s again is probably on the cards. May not get that before, well, we could get that before Christmas Eve on Friday, which is when the markets will be shut. So that only gives us tomorrow to trade. Are we going to take the short side down? Potentially, absolutely potentially. We want to see how this gap area now trades out today. The support should come in on the bottom of this 69.88. There will be buyers here trying to hold this market up, but for me overall over the next week to 2 weeks, I think 65.40s will need to be tested again before we move higher. I think we're going to need a fundamental catalyst to get us up to the 73.98. So let's just call it $74 handle, to drive us up here. You could have an almighty drawdown on the DOE readings today at 3:30 GMT. So let's look out for that today. And I think that's, if anything is going to push this market higher before the end of the year, it's going to be a deep drawdown on DOE today and potential conflict. Probably this Russian-Ukrainian situation picking up. But even at that, I don't know if that's really going to be the catalyst for much higher WTI above $74. Anyway, we have the framework here. Pivot just sits in this gap area that was open yesterday. So we're going to monitor this quite carefully today. I would be looking at the longs. However, not much trading to be done in front of DOE, right? Really not that much to be done. I think this market is cheap. Anything below the 200 EMA, 65.40s is the absolute floor price, I think, for oil right now. WTI, that is. There's quite a lot of levels on these charts. We are tracking quite a bit. Going to make that oil area in gray and kind of unfortunately leave that resistance area on. Another one to look at today is this euro market. Looking at this on the got the weekly up here, weekly bars. An important test right now on the 13.310s, which was a kind of pullback low from the week of the 15th of June last year. So it's really important for this market to be able to get back above where it's pretty much testing right now, top left of your chart, 13.310s, and put in a footing here, right? But we're sort of compressing into a sort of a wedge here, right? And with these, this is actually a pennant. So with this pennant, we should really head off to the downside once we do break. And so that's why, for me, I think lower for the euro, a stronger dollar on some risk coming into the Christmas picture, spread. We have one Omicron death in the US. Maybe we have a few more announced. I don't want to see it, but we're not emotional as traders, right? That could bring in a higher dollar essentially. So do keep an eye out for quite a big level here in the euro. I wouldn't be looking for longs for the breakout. I mean, it's going to take quite a while to push above and prove some support here. And I just think it's going to overall, it's just going to fail. But let's see what we can get. I'm actually not trading the euro that much these days. Cable, yeah, a nice looking chart on cable here, the 3202s as support. This is a big sort of line in the sand, harking all the way back to the low of the week of the 19th of June 2017, right? And you can see that on these charts. Actually, sorry, I'll just take my mug off the screen and you can see that just right here. It's that low. It's coming into play a couple of times. Came back into play there on the low of the 29th of September last year. And that's going to be the next step down, unfortunately, if this market does fall out of I was referring to the wrong level there. Sorry, the low of the 16th of June 2017 coming into play on a couple of occasions here. So it's held the lows for the last month essentially, just breaking a little bit there, you can see, but we are bid up on that. Target would be 33.61s actually and above for the swing traders, because we just cannot hold trade below the 3202s here. So keep an eye out on that. We do have a nice line in the sand on the 60-minute chart. You can see here this line in the sand really goes all the way back a couple of months now. But essentially, nice area to get involved for the longs here. In and around 3288s. It's coming in on the trend there on cable. All right, gold. I don't want to talk about it. There's not much going on in gold. I mean, really, it's just holding on the 1782s. No change on my analysis yesterday. I still think 1782s needs to hold this market. It is holding this market for now. Trade into it though. It's looking like it does want to trade, and I'm not going to guess if it's going to hold or not, but there should be some element of support there. NASDAQ. Now, this is the one I really want to talk about. Yesterday, you see the opening print here. Actually, have too many moving averages on here, so let me just get rid of all of them. The 20 and the 50, and we'll get these pivots up to date. All right, so you see the opening print here off to the downside, and as this market came down to the top of the gap area, which was 15,674 and a quarter, it splashed in and took quite a bid back up off of it, right? So, sorry, wrong camera. Took quite a splash back up off of it. So it was a very tricky trade to get on at the time, I have to say. We were monitoring this live, but it took probably 2 attempts to then smash down through the top of the gap, and it was all written in the stars at that point. The bottom of the gap was to trade 15,615.75, and then bids for the buyers there to be had. First test, it flushed down, I think, eventually. If I get my risk tool on here, you probably get the low to about the bottom of the gap was about 28 ticks there. Yeah, so if you're stopping out, as I say, I like 40 ticks on the NASDAQ. Holding that into at market now, I mean, that's 14,410 buckaroos. Sorry, that's half of that. I've got 2 clips on for that, so on that calculation. So that's actually going to be $7,200 per single contract traded. And well, let's see, I'll sharpen this up to, about 40 ticks. So that's 33.5 to 1 at market. And, this is one of the trades well worth waiting for. How do you know to wait for them? Well, you don't. And if you're bagging even 20 to 1s or 10 to 1s, once or twice a week, you're far outstripping your losses on the ones that don't work. But you got to have the patience to wait for the good looking ones. And I always say, only take the good looking trades, right? So SPOOs, well, sorry, to finish off on NASDAQ, let's go over to the weekly here. You can see testing the 16,000, big psycho handle here, 20 EMA to trade above. I think it's just more upside. Just more upside here. I mean, 16,000, there's got to be a ton of stops sitting on the other side of this thing. Absolutely. And I think, I just think traders are going to push this level. What we do always see with these US equities is we have a decent European Open, especially when we're retracing and we're rallying back up after a bad day or two. The US equities will rally high in the European session, or kind of stay elevated from the dip that was bought the prior session, and they won't really come back that much. If they hold like in this sort of pattern coming into the US session, 9 times out of 10 we've seen now actually is that really they stay elevated, and that's over the last probably 2 to 3 weeks of observation. So for me, I think, look, sit here and wait for a push above the 16,000, and then I'd be looking for any sort of a pullback. I wouldn't really be saying I'd be buying the 16,000 at that price only and stopping out however many ticks below. I'd be like looking at more, what is the shape of the market after it pushes above, right? And then look for that pullback. We'll probably pull back to a 15-minute chart when that does happen today. SPOOs looking quite weak under this consolidation area. This was in yellow the prior couple of weeks. It does need to get back to 46.63 quarter, which is this zone above. I'll show you on the daily here what we're talking about. There you go. I mean, look, 46.63 is just another little hop, skip, and a jump for this market to the upside. I think while the buyers are on this book, I think I'd be kind of happy to take off at least 50% of my longs from yesterday at that level, even 70%, and then play the runners for further highs back above for the Santa rally. I think the Santa rally is on. To finish out the year, I think we're going to get a new all-time high. This market tends to do what everyone wants it to do, because frankly, the stonks, man. I have my stonks hat somewhere around here. There you go, stonkarellas. Oh, on that camera, right? So, pull back to the 50 EMA on the short side, maybe. Notwithstanding headline risk, the one thing I am worried about in these equities is that gap still remains below on the downside. So if we do break down on the 50 EMA, I don't think the 45.84s is going to hold a second time. I do think the gap will have to trade out, and then we'll get back on with the Santa rally. So we could be in for a volatile situation if that's the hypothesis I see is going to trade out. And the Dow, finally, the most bullish looking weekly chart on the markets right now. Look at this hammer chart right now on the Dow. This tells me we're going to the moon, right? Dial it in. We're going big time. We're starting to rally to finish out the year on the Dow. As long as we can close this week with a bar like this, then I think next week coming into the new year when we reopen, the following, well, actually we'll be trading 27, 28. I think we can easily just have a stonker of a week next week once these markets reopen. So, watch out for that. Longs on the Dow, positioning. Well, the gap was there yesterday to be bought really on the open. You just had this pullback here. I'll show you on the 60-minute. You had this pullback here over the open, and that was the European session this morning. Yesterday here, this was the pullback on the open, and then got smashed, and boom, 35.340's target, all done. Lots of time before the end of trade, and they managed to hammer in a new little high on the day to close out the session. But the best of that trading was done by 4:30. Very nice for us in the Duggan Capital Room. as we are done at 4 o'clock in the room. So yeah, really, really nice market to trade the Dow. Dixie, while we were talking about that Euro trade, worth looking at the Dixie on the weekly. Yeah, I think this looks like a pullback, 95 spot, 73s, 53s. And while that happens, the Euro can definitely put on a little bit of a push above. But I think the next 4 weeks of trade here, I would want to actually be long the Dixie for sure. Yeah, I think that's what I'll be talking about. So, anything else to cover? Not really at this time. That's it for me for this session, pre-US session. To tomorrow will be my last one for the 2021 slate. And we have on the Duggan Capital website also now Your Morning Read by our senior trader, Reed Rossley. So you're looking forward to having that on the website, and already quite a following to that blog so far. So do tune into that. We do, of course, post that each day in the Duggan Capital trading room. Please do click to subscribe in YouTube, and listen, have a great Christmas. If I don't see you, I'll see you in the Discord room. Take care. Bye bye.